Hello everyone and welcome back to another video of cryptos. It's been a while since last video. We're going to look at BTC and XRP as this was the one voted from the Quora Inner Cycle team. We're going to revisit the long-term count and also see where things have brought us today and look at the alternatives. What are the changes, if any, based on the recent move to the upside, and can we continue further to the upside is the main question. So without further ado, let's get in the charts and see what are the main structures that we have to keep an eye on moving forward. So I just wanted to get started with BTC long-term count. I'm going to use the BLX over here. As you remember, if you don't, you can go back in the previous videos. We talked about some cyclical analysis last time, and pretty much we looked at, because cycles are measured from low to low, so we looked at the low to low, and we said here we've had like 454 bars, and we're from low to low in this particular case, for example, and from the low to the next halving that was 512 bars, and we kind of came up with a similar cyclical replication, fractal relationship here from the current low, which is down here, and that brings us to potentially the end of February, meaning we could keep going up until then, or we can just, well, to be fair, you know, that will be when the bottom is going to be in. So we could continue going up for a little bit longer, up to around 50k. I will show you now how far we could go, and from there come and do the low in like February of next year, and that 80% decline or whatever that was is going to be then of course the generational low, supposedly based on the cyclical analysis. Now my Elliott wave analysis tells me that most likely, you know, this is a case where we have 5 waves going up here. There is a lot of talk about this scenario. 4th wave is here, and that's going to be a 5th. And although that might be a possibility, it's not likely a lot. That's one thing to remember, because these two, I mean, there is a guideline of alternation, guys. There's no rule. So the alternation says if one correction is deep, the other one is going to be shallow. I don't see any shallow correction here. But even if we just assume that this is going to be the case, based on the cyclical analysis, I still expect that to move higher. I will tell you again how high we can go and when we're expected to start moving lower. And the thing is, if something like this were to happen and we see that fractal relationship actually playing out, then here's what we'll have to worry about. That's going to be 1 and 2. That's going to be a 3 and a 4 and 5. That means that actually the moment we break above the previous high, we are going to have a top in, okay? And the 5th waves typically are indeed very, most of the time, large in cryptos and commodities. However, we've seen, of course, short ones. So the problem with this count indeed is even if we do go to fresh highs, the moment we do break above highs, that's going to be a top being in. So that might be more worrisome rather than having another leg to the downside, of course, and then being able to say we're going to get an impulsive move to the upside, and that is not going to stop until we get, you know, to like 1 million or even higher. Now, I don't want to take much of your time, but based on that fractal relationship here, look. Sorry, no, I should be, hold on, yes, the 79. Okay, so from there to there. So the assumption is that we could get that leg moving up to 79. So I should have done this the other way around. which would then bring us up to around 50K. Okay, so from the top to the bottom, if we see a similar reaction, I repeat, 70K is going to be our top, and then from there we're going to crash, and we're going to crash some, what, 85%, supposedly, like some 85%, let's say. And if we make the assumption that's going to be the top at the 50K, then the 85% correction is going to bring us down to around, well, I would say just below the 20K. Around 18K would be the low for further continuation. Now, what I personally think, guys, and according to my count as well, we are in a very peculiar economical, geopolitical situation these days. Stocks are moving lower. There is high risks of higher, I would say, of recession, despite the fact that everybody says there is a, even with the GDP increasing recently, there's going to be more chances of a soft landing. I actually don't agree. I'm the opposite, in the opposite group. An advanced GDP, hot economy means that the Fed is not going to take a step back anytime soon, and by keeping interest rates higher for longer, of course, this is going to increase the recession risks, because also there is a lot of concerns in the bond market. There is no supply, liquidity is running dry, and at the same time the financial conditions are getting tighter and tighter. So the Fed, it's actually owning more money because of interest rates remain high. So it's a situation that is a little bit requires our attention, guys. Okay, now that was a parenthesis. I think if we do get the recession, and since we are still inverted, the yield curve is still inverted, there is lots of downside left for risk assets. Okay, so I think what is supposed to play out, and time wise by even February, could still play out, or maybe not. But what I'm saying is that this leg to the downside is very likely going to come, in my opinion, and based on macro and Elliott wave perspective. However, I think where we're going to find out which one is more likely is when we get down to this zone over here around 20 or so. We're either going to stop and go up, or we're either going to just pull back and then do that leg to the downside, which I expect to see, of course, taking us to below the previous low over here, below even, well, just to give an example, if we're going to do the 50K, the 100% will work. It's not much lower from where we're, maybe around 10K, let's see, 43, let's say 50 or something. It would be around 12, 11K, okay? Still double digits. So this is the expectation here for the cyclical relationship. Now I want to take you quickly to BTC and just tell you this is actually the main count still, until we break that 79%, to be honest, guys. So until we get to 50K, that's not going to change. Chances are going to change when we break above the 50, because the 50 is like some sort of sentiment gauge can be used, so above the 50, from the top to the bottom, that price action over the past 2 years would be considered as more bullish rather than bearish. Okay, and then above 61, these chances are going to increase more. Above 79 we're going to make the change. Okay, so this is my count. Now if we look at the AB, where C is going relationship, we're going to see that also comes around the 50K according to the A and the B. So that tells you that there is high chances that this labeling of AB is correct, because the 79 also points here, the 100% also points here. When things come together like this, there is higher possibility for it to actually play out. This means that this would be something like a wave 1, and then we get 2, and then 3 and 4 and 5, something like that, right? And I think we're not done with wave 1 yet. However, and just to remind you on what I said before, in case that low is in here, we're gonna go for a 5-wave leg. The moment we break above, we consider that the top. So that doesn't give us a lot of space to hold the Bitcoin. You know what I mean? The same case is valid here now. Okay, we've crossed above wave A. And although the guidelines say that typically wave C extends 100% of AB, the high is in. Okay, the 38 is out, which is okay. 61.8 is next. So 38.8, 40K, around 40K is our next level. Okay, let's see if this is going to play out. Now, there we go. In the shorter term, I'm looking at it as such. This is a flat. You've got the wave B here, still within this trend line. Okay, the channel, we are fighting to get above the median line of this ascending channel. We are still above wave A, still above wave B. As long as we're above 31.20, guys, then the short term is bullish. Now, 1 and 2, not liking it much for obvious reasons. And then 3 looks like to me is not done yet. Okay, so we are currently in wave 4 of wave 5 of 3, in my opinion. So there is still a lot of room. Well, not a lot of room, a lot of price action, I would say. This is 1 and 2. That's going to be your 3. Then you're going to get a deep 4 because you got a running flat here, and then a 5. And that would either be wave B finishing, or we're going to get a correction in wave 2 and then continue up in 3, 4, and 5. So it's either the one or the other. So again, we are facing the same issue, that because we are in new territories and we have 5 waves up, or the moment we have 5 waves up, that is going to be a complete structure to a new high. Unfortunately, it doesn't give a lot of room for interpretation. That's the problem. So this is the idea here, guys. Now, when we look at an alternative here of that particular case as well, instead of looking at this as a flat over here, you know, we're looking at wave B finished here, and we're looking at this as 1 and 2. It's not much of a likely scenario, guys, because for obvious reasons, you know, we typically want, of course, the larger degrees to have larger patterns and larger structures. And in this case, you see that an intermediate degree move would have a similar wave, like similar structure in terms of longevity with a primary degree. So it's not much likely. However, just keeping it in mind, we could just actually still be in a intermediate wave 3 here. However, we would probably need much more room to the upside to end that wave 3, because we would be looking at least like around 37 to 40K, given where the extension would bring us. And another one is wave A actually having finished down here instead, you know, because we still could consider that we have 5 waves down here. That would bring us to 1 and 2. And that would say that's going to be a wave 3. This has even more room to the upside. However, it's not much likely again, because you see, if this is a wave B, well, in the primary degree, this is higher likely an intermediate move. And then you've got an alternate. Let me just click that one. There we go. This is a W, X, and Y, guys. Okay. So if this is a W, X, and Y, it means that we are expecting an ABC here. And just to bring a little bit more perspective in this case, look, that would be the X, that would be the W. You see, we'll have exactly the same channel here. However, we would expect that to end under the 100%. So in WX case, typically W and X bring us to around the 61 and 78, closer to 78.6 most likely, because WX and Y is double zigzag, guys, is a sideways sort of market with a bias, and this of course is biased to the upside. So that also could play out. Maybe 43.63 is going to be our level. So if we see something like this play out again, we will have to wait for things to play out to see where we could be heading. Another one is this. I don't like it much. We are looking actually at a wave B being an expanded flat. I don't like it. Why? Because it's supposed to be an ending diagonal contracting, but it looks like it's expanding. Another one would be this. Again, a flat. However, in this case, the flat is different. So we'll be looking at this 5-wave move to the upside as an impulse. And that impulse, of course, is valid because wave 4 ends above wave 1. Okay, and it is kind of one of those cases where we can say, you know, wave 4 would be okay since it does around 61%, because we've seen, we want the truncation to be 61.8, but in cryptos we've noticed, of course, many other times before, we noticed that it just doesn't happen. So then the other one I would like to show you, hold on, is the last one, which would of course imply that the low is in wave Y. And again, there is of course different ways to interpret this. The extension to wave 1 here and then wave 2. You could have 1 and 2 here as well, you know, and start a new move as 3, 4, and 5, and then get 3, 4, and 5, which, to be honest, it would be a more likely scenario if the low were to be in, because we would prefer to see an extended move beginning 1, 2, 1, 2, rather than 1, 2, 3, and 4, and 5, because, and it depends, of course, where that 5-way structure would end. So you see, it all hangs on how we're going to get up there, how many waves we're going to get, what is going to be the structure, okay, and when we stop, how much we correct, and what happens next. Okay, so everything we have to consider. So that's going to be for BTC. Now let's move to XRP. Okay, the reality is that XRP, it just has this weird structure and just corrects and corrects and corrects and corrects. This has been my main for a while, guys. Okay, so I see this still, I still expect a lot of upside here, by the way. But in the short and medium term, it looks like we don't want to go up. You know, this looks like corrective. So if this is W, X, and Y for W, this is also some sort of W, X, and Y, and then again, W, X, and Y is what we expect. Yes, you can have a double zigzag in a zigzag or another double zigzag because they are the simple types. You don't see any triangles in wave Y here, or a double 3 or anything like this to even consider, okay, maybe what is this guy doing? So, so obviously the assumption is that wave X is done here. We might still be in wave X. I would personally prefer, if it was a smaller structure, like 1 hour, to look at this with a little bit of bias of what I would think would happen, okay? But because we're in a very large degree, we don't have that room for that interpretation. If we were in a 1 hour time frame, I would say, okay, most probably we're gonna get a triangle here or something. And I would say that because we will still be looking at any side we're going up or down, corrective, okay? Or some sort of correction, rather than, you know, come and say, well, wave X is done. So with that said, okay, I think we have more downside here. And I'm not saying we're gonna go back to wave 4. It might be hard to believe. But if this is a W, X, and Y, and as I said before, you know, 20 cents is going to be one level that I'm going to start really looking at, you know, really, you know, adding to the position. The previous low, of course, is going to be another level. Now, if you're in or whatever, this is your case. I'm personally not looking to enter right now. I think as long as we remain below at least the 50%, which is around the 62 cents, there's not going to be no change for me. I do typically changes above the 61, 79%, especially above the 79. Most of the times, the 62, when we have an impulse or something that indicates there might be more chances of an invalidation, okay? But in this case, I think we have to keep the 79 in mind because it's very hard to consider this as a move to the upside. I'm talking about the X wave. So personally, I'm looking also into the short term a little bit. Okay, it's very hard to consider this as anything else rather than an ABC. You see, you've got A, B, and the C. I don't like it because it's very extended wave C, but unfortunately, it's the only way we can see this. taking place. Over here, you very likely have something like of an A, and then you have A, B, C, D, and E for a triangle, and then you have A, B, C, which means that this might have finished because wave W was fast. The correction in B was slow. Sorry, wave A or W, it doesn't matter. Actually looks like more of a W. And then you need an ABC. So someone could assume this is your ABC, but because we are looking here at how we are correcting, yeah, it's more likely that if this is W and this is X, we're probably going to get something like of an A and then B and then C. So there is potential for short-term upside here. However, it really would depend on whether we can stay above 53.20, okay? Because if we don't, this is going to be assumed probably as an ABC or not. But even if it's an ABC, then we have to consider other cases. If it's an ABC, maybe we're going to get like a leading diagonal or an ending diagonal or something else. It's always how it works, guys. We have to pay attention to the prices, see how structures are moving, and be able to make, of course, conclusions that they make sense and they're following the guidelines and they follow the rules. Nothing else matters in Elliott waves. It doesn't matter what you think based on your MACD or whatever. Elliott waves are Elliott waves for what they are. So be prepared. Now, looking at the alternative here for XRP, as I said, you know, it's pretty hard to consider it, but it's an alternative. We would assume that wave 2 is done here, right? And this would be an open leading diagonal for wave 1, and then wave 2 would be here. Last time that we saw that count, guys, I was looking at 1, 2, and then 1, 2. Hold on. Let me do it again. Because things have changed since the last time we looked at XRP. We're looking for 1, 2, and then 1, 2, and 3. The problem is we came all the way down and we've actually overlapped the previous wave. So this is corrective structure. The 1, 2, 1, 2 didn't play out, and along with that, we have to come with this. I don't like how much wave B is extending, but it's not so rare to say in cryptos to see wave B extensions stopping at 162. Okay. The thing is, there is liquidity spike here, let's say stop hunt spike. So it can be considered as a wave B. All right. And if this is considered wave B, then we can also go ahead and assume something of that line. 1, 2, then this could be like a 3 and a 4, and this could be a 5. So that could be seen potentially. In this particular case, since we're still fighting to have an alternative as a 5 wavelength to the upside, to the downside. And if it is the case, maybe we don't have a W, X, and Y here. Maybe it's going to be an A, B, and a C. But it doesn't matter. The point is that even ABC or W, X, and Y is still points to the downside. Okay. So now the questions here with the alternative is this: if this is 1 and this is 2, which can be the case, then we want to see that turning into a 3, 4, and 5, right? Something like this for us to continue higher. So otherwise, what could happen is that maybe, you know, we see something like this, and we're gonna get like an ending diagonal here, and wave 2 is gonna end here. Or maybe we're gonna, like, you know, do something like this. That's gonna be a leading diagonal, and then we'll get a B and a C, or 1, 2, and 3, and we'll continue higher. We do not know. That's why we have to keep attention in the short term. A lot of people say, don't look at the short term. It's just noise, but you're missing the point. Anyway, so that's going to be all, guys. I hope you enjoyed. If you did, like, share, appreciate, leave your comments, be kind, and I'll see you next time.